everyone, welcome back to the market update featuring by Rationale and MarketsAll. The main attention is still rising yields and the growing possibility of Donald Trump presidential victory, or you can say the election uncertainty. In the latest market update video, I highlighted that yields are heavily influenced by the possibility of Trump victory, and like currently Trump trade is going on. A win could lead to increased fiscal spending, raising debt levels, which would likely drive down bond values and push yields higher. In today's video, we'll be diving into some key market updates, starting with factors affecting the bond yields, actual factors, what might affect bond yields, and the current state of interest rates and market sentiment. I'll also be sharing Economıc Calendar and discussing the potential impact of upcoming data. And let's get started. First of all, here in this chart, you see a table by MarketsAll. You can follow him through like a Twitter or X platform. You can see that factors affecting bond yields, there are like three section. It's the composite of like a growth expectation, inflation expectation, and term premium. First of all, growth expectation, it's separated into two. First of all, like a structural economic growth and cyclical growth. What's structural economic growth? What does that mean? It could be generated through more people joining into the labor force, like or more like a productive use of labor and capital. The ability of an economy to generate structural growth is an important driver behind long-dated bond yields, because like a strong structural growth would mean structurally higher long-dated yields and vice versa. For example, this AI boom is a good example for this, and that led to speculations over big productivity gains and therefore boosted the higher structural growth narrative. The second one is cyclical growth. Cyclical growth trends are driven by like a credit cycle, the fiscal stance, earnings growth, labor market trends, and like a more like those kind of stuff. The healthier they are, the higher short end bond yields can be pushed also. Like the healthier those like a credit cycle, fiscal policies, as they support the idea of economy is growing, that will mean like higher yields. Also, for the short end of the yield curve, the monetary policy, the tightening or loosening of monetary policy would be effective for sure. Also, like for example, like this recent, like the effect of tightening or loosening monetary policy on yields, or increasing EPS, earnings per share expectations. Those are like a concrete examples for cyclical growth example. When you come to the inflation expectation. First of all, it's not about like a today's inflation. That means like if the expectation about like the economy is good, like if the economy is expected to good in the future, that will mean like the demand will be higher. With the demand, that will create some inflation. That's why if we see a higher inflation expectation, that will lead to higher yields, as that higher yields will be enough to compensate the need for investors to compensate their fund to be locked. That's the mentality. That's why like you need to like that's why I'm saying like I'm emphasizing that it's not like a current CPI situation. And the third one is term premium. This is important in terms of it indicates the current situation. Actually, basically, it's a compensation that investors demand to take on long-dated interest rate risk rather than just owning and rolling short-term T-bills. For example, I mean, I have two options. I can buy 3-month T-bills, and when it expires, I buy a new one. And I keep rolling it, right? There's a yield that I get from this kind of investment. But on the other hand, I can just buy like a 10-year bond. But the difference between that, like, there should be a reward of locking my fund into 10-year rather than 3-month bills. That compensation is called term premium. And currently it's the case. if the ask compensation by investors for long-dated bond increase, it could be done with increasing yields. Like lower uncertainty means lower term premium, and vice versa. There should be a compensation to buy a 10-year yield rather than 3-month rolling. Otherwise, I wouldn't lock my fund in the long yield. As the uncertainty increase, the compensation is expected to increase, and that's the case due to US election right now. So considering the current market, higher yields aren't always like a bad for stocks. There's a general narrative that I mean, if yields high, stocks will do bad, but it's not always that straightforward though. Understanding the reason behind rising yields from this table, for example, okay, yields are rising, but why? Which one? Like a growth expectation, inflation expectation, term premium? That would help you to evaluate the current market environment. Like in the current environment, despite the ongoing election uncertainty, which is like here is the term premium section, with like that's currently pushing yields higher. Equities, why equities can hold like a steady equities? Because they're supported by a positive earnings season, first of all, and the general downward trend in inflation, despite the latest CPI data, is still intact. This aligns with the soft landing scenario being the base case for the market outlook for now, and that helps equities. Definitely is like okay, due to election uncertainty, maybe like a downward trend in yields might be postponed a bit, might be postponed like a two months or something, but the case for stocks is still due to valuation mentality. I mean, for like at least like earnings, not due to valuation is not that correct wording there, but especially with the help of earnings and support of inflation, it's still doing well. Like stocks are still doing well, and the most important data that we will need to follow in the upcoming days is non-farm payroll, definitely. Economic calendar this week, here you can see in this table, it's highly like a busy week. First of all, this week crude oil was like important. It started the week with a significant drop, losing over like a 4% after Israel targeted Iranian like military facilities that weekend, like in the weekend. Adding to market concerns, China's industrial profits fell by like a 3.5%. From those strikes from Israel to Iran, the lack of any strikes on oil or nuclear facilities over the weekend also increases like a downside risk for oil as we head into the new week. I mean, it's impossible to guess what's the action gonna be in the like a Middle East, but my main outlook for oil is still like a downside. There's a room for it, and I'll show in that in the chart how I follow the oil chart. Also, like last week's weekly inventory data, oil was bearish. Generally, like the supply and demand condition for oil is bearish. That's why I'm supporting that. The only thing that I can see that the general like a growth concerns ongoing in the world. Supply issues supporting the bearish idea. The only thing is speculative Middle East geopolitical concern is the only way to support oil prices, and it's not possible to guess. With that mentality, while you have a bearish idea, the only thing that you can do is putting a stop loss in oil, or like having a short position and put a stop loss, because you can't guess any geopolitical situation, and keep trying to do like short ideas. That's my mentality. In Japan, market sentiment is a bit uncertain. The mood shifted. Is like the ruling coalition lost its majority in the weekend. Last weekend there was an election. This increased both like a political and economic uncertainty. Also, there's gonna be this week like a Bank of Japan rate decision. It is expected to stay like in 0.25% level. And looking ahead this week, we'll see like earnings reports from Magnificent Seven tech giants in the US. We'll get updates on, as you can see in this table, on like a jobs, GDP, and core PC index. Like PC this week, non-farm this week also. Meanwhile, the Eurozone will release growth and inflation data. The general market pricing apparently will be shaping around the three main topics. First of all, earning reports from Magnificent Seven. This week we're going to receive, I think, Google and Meta, Amazon and Apple this week. And there are, like, according to FactSet, I highly suggest you to subscribe to FactSet also. It's really nice, insightful information they're providing. And according to them, the Magnificent Seven, four companies, NVIDIA, Alphabet, like Google, Amazon and Meta platforms, are anticipated to rank within the top 10 contributors to year-over-year earnings growth for S&P 500 in Q2 2024. However, only NVIDIA and Google are expected to place with the top 5, with NVIDIA projected to be the largest contributor to S&P 500 earnings growth for the third quarter. Speaking of earnings season, it is important to mention that the potential impact of S&P 500's net profit margin on ongoing inflation concerns for Q3 2024, it stands at 12%. As the net profit margin of companies increases, that might add to, that might support inflation. And I think in Q2 the number was 12.2%, and for Q3 it's 12%. I mean, I don't want to call it there's the trend is coming downward, but yeah, at least quarterly we saw a decline over there. But yeah, it's lower than Q2, but remains above the 5-year average of 11.5% of net profit margin of S&P 500. And yeah, also I'll be reviewing the charts from the to show you how I'm following those charts of Magnificent Seven and some stocks, and how I will trade. At least I'll try to give some idea. Other than earnings, the second important point that will be influential in the markets, US macroeconomics data for sure, including Q3 GDP, job openings, CB consumer confidence, non-farm payroll, that will be most important, PCE number, and ISM manufacturing data. Any data suggesting, just as a reminder, I keep repeating this, but yeah, it's important. Any data suggesting the soft landing would help risk on trend, especially for the equities. Remember that any disruptive data might fall, and disruptive data on economic growth side might call an aggressive rate call, but that would lead to a recession. That is why the result wouldn't be good for risky assets. Please, at least for a short term. What I'm trying to say is, it's there's a general know-how that if rates come down, equities or risky assets will do well. The way it comes to down is much more important than the fact. Okay, because the thing is, I keep repeating this one, but lower rates is only important in terms of valuation, and it's a long-term mentality. Just focus the way that it comes down, and if the economy is hit by more than expected I don't know, shock on the economic activity side, that wouldn't be good for equities, and that would disrupt the risk on environment definitely. And finally, the upcoming US election on November 5th, it would be the third major data flow that we need to follow in order to evaluate financial markets. As discussed in the previous slide, the election impacts the US election impacts financial markets by influencing the term premium, as it introduces uncertainty, it's called Trump trading, and the mentality behind that is Trump is expected to employ a tax deduction, tax cuts, and there would be that income would be received from taxes should be compensated by some way, and that would increase the fiscal debt. How can that possible? He would be issuing more treasuries, and there will be much more treasuries in the markets, that will decrease the bond prices and push the yields higher. That's the mentality. That's the Trump trade actually is going on. And now let's jump into the chart analysis section of this video. First of all, I would like to start with the oil. I was actually following oil. If you were the follower of channel, I mean, I was following with like this symmetrical triangle chart before. Let me show you like this. Let me get rid of this for a second. As you can see, we saw a breakdown after this geopolitical tensions stuff. We saw that price spiked here, and 40-week moving average was the resistance. But I mean, if you had that like a short trade like this, and if you had a tight stop loss, you would have stopped out. That's why, I mean, I switched my mentality to this like descending triangle. I'm watching this 67 levels. If I see a breakdown around here, that would support the bearish idea on oil. And sorry, my bad. Yeah, let me go with the Kakaran 40 futures. Here, as you can see, technically I see a head and shoulder bottom chart pattern is, I mean, potentially might form here, and any potential like a breakout from here, that would also a breakout above this red line of 200-day moving average, and that might be a nice trade idea to evaluate. And I mean, on the euro side, the economic activity side is a bit concerning, especially compared like relative to US side. That's why I'm not sure about like equities side how they would perform, but at least we know that ECB is moving faster on rate cuts, and at least they're reacting on that situation. But I'll be following charts to evaluate that. And here I would like to show you silver and gold ratio. And first of all, let me start from monthly chart. As you can see, the silver and gold ratio is like almost like all-time low. And when you come to the weekly one, here's really like I mean, not the perfect one, like, but at least a consolidation going on around here. And considering the like highly like outperformance of gold, we might see some profit-taking activity on gold. And I don't think that silver has still made its move, and that's why there's still like room for silver to go. And as you can see, like you can adjust your positioning between gold and silver according to this chart ratio of silver to gold. And yeah, like let me show you how I was flowing silver. Yeah, you can that's I'm following right now. There's a cup with handle breakout, pulling back. Today it's while I'm recording this video. There's a like a I don't know 2.41% above, and yeah, and let me go with Bitcoin. I had mentioned this chart in my latest video as well. This is the weekly chart, weekly cup with handle chart that I'm following. For sure, everybody's waiting for this breakout, but when you come to the daily, I was also following this ascending triangle chart pattern. Look how it's working, like one touch, two touch, and breakout, pulling back. Look where it got, where the price got rejected, and also it's like a 21-day moving average, and it's carrying like this. For sure, it was expected to see a rejection from this area. I would like to see some consolidation around here. If we see some consolidation, the price action would be better. And let me, yep. Here also you can evaluate this like I don't know, cup with handle-ish. But yeah, it's I mean, everybody's also following this one. We're here at Bitcoin. And Ethereum, I'm following this, as you can see. I mean, in the higher like time frame, I was following this trade idea was given in Rationale, by the way, back in time, and then it acted like this. It came down, and currently in the daily chart, you can see that there's a really nice symmetrical triangle chart pattern is formed, a potential breakout. That's that might lead to better price action, higher we can see higher prices for sure. And in that, I mean, here there's a fake breakout, but if you want to wait for this to also broken out, you can also follow Ethereum chart like this, and you can wait for this dotted chart pattern breakout. And yeah, now I want to switch to like a Magnificent 7 charts. Here you see the Google chart. After a downtrend, you can see that head and shoulder bottom chart pattern is formed. And while I'm recording this video today, we're gonna receive earnings, and that might lead to a breakout. I don't know, generally, I mean, I don't like to trade earnings day if I don't have any like a position, if I don't have any cushion on that stock. If I had traded from, I don't know, from here, if I had bought it and if I had carried up until this level, that might be an option, but without having anything, like I don't generally prefer. But that might lead to I mean, a breakout. And to be honest, like this is like Google is considering relative to other Magnificent 7 stocks, it's underperformed a bit because like general AI mentality is, I mean, it might rule out the like search machine mentality, but Google is not like only like a search machine company for sure. It has like a lot of different area of like income and stuff. I don't think that it's like I don't know if that's the reason of this underperformance, but yeah, Nvidia, I had mentioned this, that I'm following this symmetrical triangle chart pattern, and when you I had put alarm, as you can see here, you can see this price action after a breakout. Currently we're here, and to see a healthy price action, we need to see some consolidation around this area to form a cup with handle. Actually, I'm not like always chasing to see a cup with handle, but in any kind of chart pattern, there's a cup with handle is inserted at the right side of the base. Actually, I mean, you can see that, and because that handle side is the latest reaction, the latest plus lightest reaction from suppliers. And when you see that lightest reaction, that means, okay, if that price comes down like a very low, like I mean, for example, if we see a price action, if that price comes down around like at these levels, that will mean, okay, still there are like a lot of suppliers. But if we see like a low rejection, if the stock price is able to turn from like around here, that means, okay, demand is higher than the stock. That's at least an indication. That's why I'm trying to see like that, and that's how I'm following Nvidia right now. I would like to see some more consolidation around these levels. It doesn't necessarily come this level, by the way. I just like drove like randomly, but yeah, Tesla. This was also another not candidate actually. It was given in Rationale Trade Ideas report also, equities report. Here you can see head and shoulder bottom, head and shoulders. I mean, when you consider this downtrend, you can call it like a bottom, but yeah. And here we are. I'm expecting to see a nice breakout, but this was after earnings performance. Generally, I mean, I don't chase this kind of stuff. I would like to see some like a consolidation around these levels, as I am expecting in Nvidia. And Facebook, Meta, after a breakout, this ascending triangle chart pattern, pulling back to the short-term moving averages, and here you can see it's consolidating. That is really nice in order to get like ongoing pullback to the short-term moving averages trade mentality. This is really helpful, and it's really nice to see such consolidation. My only concern is for sure the earnings. After earnings, we'll see, but it might be a good candidate as well. And Amazon, Amazon, I'm following it like this. Actually, for example, this, if you use like for example Mark Minervini's like a volatility contraction pattern, you can see here that the price contracted from here to here 24% pivot points. Here you see that 7.5%, and here to here 4%. As you can see, price is contracting, and I would like to see volume contraction around it and a potential breakout of this. Actually, you can take this as, I mean, it's not a perfect one, but it's also a form of copy handle. Actually, like the price action is like, at least you can see that coming and forming a handle, and like catching a potential copy handle breakout with merging this with volatility contraction pattern, following the volume pattern. Because remember that in order to see a healthy breakout, we would like to see a prior volume contraction, and as you can see, this volume contraction here, at least this is the average line, average 50-day volume, and if we see a few more days like this, that will mean volume is contracted, and I would like to see this kind of bar as we saw in Friday 20 of September. And lastly, Apple. I'm following Apple like this, but yeah, sorry, but like, compared to the others, I would prefer like Google is, I think, the best for me, and I'm following Nvidia for sure, as any kind of buying opportunities is like a really like worked really well, and I still I think there might be a room. I know that institutional investors still holding big time Nvidia, and yeah, in general, like that's the general market conditions in the current environment, and I try to analyze those charts and try to give you some insights about like how to structure some trade ideas through those charts. I hope you find this video helpful. If you find this video helpful, please like give it a thumbs up. If you have any questions, just let us know through comments, and please subscribe and like open notification for the videos. And I wish you a really good, really nice week. Have a good one.